up, everyone? Welcome back to another episode on the FinChat podcast, where we just sit around and we talk about things that we find interesting in the finance industry and the economy. It's Randy, Sia, and Josh here today. Sia, want to kick us off?
Yeah, guys, I'm actually quite excited to be here. Haven't been a part of a podcast or ever, actually, so I'm really excited to get my hands dirty with this. But I just actually wanted to share something I've actually learned a recent term that I've actually came across. It's called the gig economy, and it was during my research because I was trying to look at how the economy is going to look post COVID, like what the economy is going to look like and how things are going to look, especially for businesses and business in South Africa. So the first thing that came to mind, and the first thing is that popped up when I was searching all this, was permanent employees and hiring permanent labor. And that's when the term gig economy came about, when I was searching all that. And yeah, so what gig economy basically is just hiring somebody to do round about anything, dude. And that's when I came across the company Sweep South Africa, which is headed by Aisha Pando, who's an entrepreneur, and she's also a genetics PhD candidate. So so that's the gig economy.
Yeah, no, I mean, I absolutely love the concept of the gig economy because basically Uber and Airbnb, and not really Airbnb because it uses acid, but Uber or said with Sweep South. I love the idea because I think it opens the market for people to employ themselves, because especially in this difficult unemployment scenario we're in, there's only one thing holding us back, but I'll come to that now, is where so people can actually create jobs for themselves by just joining a platform like this. So it's like being a freelancer allows the gig economy. So say now we start a new company, we want a logo designed. We literally don't have to hire a designer and pay them a salary every year. We just send it out to a freelancer. They create a logo for you for 1,000 rand or whatever, 250 rand. I don't know how much our logo costs, but just exactly like that. Now that's why I actually love Sweep South, and I think because Aisha is actually helping a lot of women in South Africa get jobs, even if it's not a permanent job, but giving them some work to do where they go every week, even if it's to different employers, people who hire them to clean the house, and so on. So I really like it because I think it can really solve some unemployment issues in South Africa.
Yeah, so it really speaks to, I guess, that whole thing of building your own skills, so you could really, it's kind of like how the Tinder process works. I mean, that's kind of what I'm hearing, because when you guys brought it up, I was just the gig economy, and then because I was thinking gig economy, then it's when you said it made a lot of sense.
It's like the first time I heard it was actually on a show called Brooklyn Nine-Nine. It's the show about cops in America, and then the one girl said, no, it's the gig economy, baby, or something like that. She can hire someone to change her wheel if she has a flat tire. And then I got the concept of what it actually is.
Yeah, I think it's a really good business model actually as well. And it I was looking at it because now we always speak post-COVID, and it's okay, when is post-COVID? Because I mean, I think we're gonna live with this, I guess, for the rest of I don't want to say eternity, it sound a bit grim, but we're just gonna get a vaccine, and everyone's gonna slowly transition to normal. I think if you've seen wherever you are, lockdowns easing and people trying to get back into normal, because we've realized, okay, we kind of have to get going, because the economy is struggling, the global economy is struggling, we're going into global recession. But as one of the few innovative things that, you look at it, you're oh, okay. I mean, if you look at travel agencies, there's not going to be such a huge need for travel agencies, because I don't think we're going to be going back to the phase where we're constantly just traveling around the world for business because of Zoom and stuff. I mean, you can just hop on a Zoom and have a conversation. Yeah. So it's now all these type of businesses, and we've been talking about the whole lack of entrepreneurial spirit in South Africa, so I think this is a really
what
really
also
great idea.
Actually creates an opportunity through the gig economy, I think, is like you just said, the travel industry is obviously going to be a difficult space to be in the next 2 years, or we don't know how long it's going to be, but the people who worked in that industry picked up some skills that allowed them to do certain jobs. So say now someone who worked as a hostess or a air hostess would get the opportunity to she knows how to be hospitable, and she can be in that industry. So maybe she can get, or you can get a job in a Airbnb or something
hotel.
like that, just through a short gig of 3 months or whatever, working as a hostess or host at Airbnb in Camps Bay, maybe, just because of the skills they got. Now they don't have to go through a whole employment process of going through hiring and so on. They can just be hired, they have this experience, be a host. And then also from the employer standpoint, they don't have to employ a permanent employee and have that legal battle also, because obviously in South Africa, our labor laws are very difficult.
Stringent,
Yeah, so
power of the unions and everything.
I actually think, especially in South Africa, because we have like one of the most unskilled labor force, we have like a plethora of this unskilled labor force. So it would like really be beneficial for emerging markets to actually look at the gig economy as a feasible and a viable way forward. Because in the first quarter of this year, we already touched an unemployment rate of 30% and a youth unemployment rate of close to 58%. So this is just basically saying we need, I think the gig economy, what it does most of all is just give somebody who's not doing anything at this current moment something to do and be paid for it. You know what I mean?
if it's just for 2 weeks.
Yeah, 100%.
And I think if we can find ways to teach people to do certain skills, because I think the gig economy is especially great for physical labor.
Yeah.
Right? So a lot of people don't have the time or feel that they should actually do certain physical labor things, or they don't want to spend time on it, like cleaning, doing all the gardening at your home. Like some people love it, some people might feel like it's a waste of time, and especially in something like that, you can get people to do that sort of jobs for you. So I think to train people in that way, just to get someone in, even if someone different every week, to come clean your garden, I think it's a great space, especially for the unemployed, the uneducated, or let's say like people who just have a secondary education.
Yeah. And I think that ties back into like our first episode. If you haven't listened to that, go check it out. But our first episode, when we spoke about that thing of like let's say in rural areas, and where there's a mechanic, and if you can set up a system where you can put it online, and then this person can see, okay, this is what the jobs that need to be done, and then you hire for that. So it kind of relates to that. I think it's a really interesting business model. I kind of want to see how it's applied, and yeah. So
what do you think actually some jobs are that people that would be quite good at fitting into something like we see with Sweep South? They have domestic workers, people come into your house, clean your house, do your laundry, wash everything, and then they're also going into like getting people to help you move. I also saw that. When I saw that, I was like, yes, that's so clever, because when you move,
no one knows who to go to.
Yeah, someone to help you just pick up everything, carry it out. What do you think are also some other industries where people can take hold of this
I actually love how Randy actually touched on the whole mechanic example, because I was speaking to somebody and somebody who fixes phones, and they were saying that like the worst thing about being somebody who had to teach themselves how to fix phones and such things, that there's no professional development, if that makes sense. As like I know a lot of regulatory bodies like SAICA, for example, kind of requires from the employees not employees, but the people registered under that regulatory body to kind of continuously develop their skills so that they're always relevant and that they always know what are the latest developments. And I think that's something that like also gig economy will actually help us do. So I think mechanics will be something 100%, and it will also give them a kind of initiative to be able to say just upskill themselves.
I think also now what it will kind of like now force into the system now is you can do a lot of part-time work, so like I tutor part-time, but like you have to go through like tutoring companies. That's like so much admin, right? So now if you want to tutor, you can just literally go up on that system, and then you'd be like, okay, I need a tutor, and then like a bunch of people can just post and then go take that thing. So
the problem is with things like that, and I think like the gig economy does touch on it. So if you want to be a tutor, you have to go through that process, right? And actually, to be what tutoring platform are you on?
123 tutors.
123 tutors. So they obviously screened you, check that you have the necessary qualifications and so on. That is actually something that the gig economy does, which is great. So say now on Sweep South also, like the people who can work in your house have been screened by Sweep South. They were they checked their background, they checked do they have the skills to do the job that they are hired for. So that is actually why consumers then pay a premium, because it is still cheaper to hire someone full time into your house to come help you clean your house, do your laundry, etc. But you'll pay a premium for that because Sweep South already did that for you, and you don't have to permanently employ that person and so on. Yeah.
I actually just want to get into a bit of technical knowledge. Yeah. So I was doing a bit of so most of the co-founders, actually all of us as co-founders, are studying to become CAs. So I was actually doing a bit of accounting work yesterday, and I saw IFRS 15 actually classifies a separate performance obligation as the whole middleman thing. So like being a middleman is actually like something that I feel like a lot of people do undermine and say they want to cut out the middleman. But kind of middleman helps you hold somebody accountable, especially with regulatory bodies and people who approve things like medicinal purposes. Because imagine right now if somebody sold you medicine, the only person you have to hold accountable for that is the person who signed off on it and said that like this is like.
And that's what the gig economy brings us. They've standardized a certain level of something, because even if you're young and you have to, so now I go somewhere and I have to get a mechanic for my car, but I don't want to take it to the dealer that sold me the car because they asked like 5,000 rand for. I don't know what it actually would cost and what is actually reasonable. But if you have a platform where you can check and you have like, okay, there's like a standard pricing for it. I just like how it standardizes things.
It helps really like regulates prices and stuff. And just speaking about that and technical knowledge, such
not
as,
even prices, but quality also.
Yeah, and just like on that topic of technical knowledge and IFRS books, we posted our second episode on IGTV, so go check that out. A bit of free promo. But like on that, I think we also need to now talk about the huge disruption that this brings into into like the normal like standard sectors, because now. Like, do you think like people now would be like opening more companies? Because I mean, what's the point of hiring a company if you can just like hire a person? You see. So then, like, does that now like not promote like incorporations?
I actually think it disembodies your monopolies, dude.
Yeah.
As much as somebody should believe, because you know how many rigidities and regulations there are in. Well, take us for example. How much you have to go through to actually just incorporate this company? It's took a lot from us, you know what I mean? And being able to just supply your service, and I think it's amazing. It just decrease these barriers to entry, if that makes sense. Yeah,
especially for people who don't have access to the actual things to go through those barriers. So Sanal, Sweep South is such a good example because it takes people uneducated. I'm not saying everyone's uneducated to work in Sweep South, but it's people who most probably just have a secondary education, or maybe a diploma in something at a college. But it gives that people the opportunity who don't actually have the resources or even capacity to incorporate a business and start a business where they can actually sign up for the service, be screened, and get employment through that, which is better than nothing. If they don't, because I would work without Sweep South, if we use that as an example. They could go look out for a job, or they go to employment placement agency or whatever. They maybe get placed at a home to work at, but then they're there, and then after 3 weeks, the employer feels, this person doesn't fit into my, I wanted to work, fired. Then the woman goes home, no work again. Where this gives a person the woman an opportunity to be employed, not permanently, yes, but if there is a need for, she will be able to do something at least. So it's better than having, say now, 250 Rand a week for 1 day a week work than having 3 months of work and not having any work for the rest of the year.
Yeah, and I think that is the one thing that like the virus did highlight on, is that I'm not talking in a sense of side hustles, but I feel like it emphasizes the need for passive investment and passive income, because when permanent income stops there, it's
exactly. It gives you the opportunity. Like, I don't know, I once saw this video on YouTube about through this police brutality. I don't know if it's like on your feeds, but a lot of things about like police brutality in America comes up on my feeds and stuff on my social medias. So I saw this one video of a lawyer who actually is a Uber driver on his part time who was like questioned and stuff by the police, and he was recording them. But I was just laughing because this guy's a lawyer and now he just does Uber driving like on the side.
On the side.
But on a different note, I actually have a difficult topic to talk about. I actually want to write a report on this. So give me some time to explain it. So I feel that the venture capital space in America, and from the rising of like the tech giants in America, it actually screwed up sustainable, proper business. Because what happened with businesses like Facebook and these big tech companies, and we've seen how this is starting to fail with WeWork and these recent almost attempted or failed IPOs in America, is where the VC companies don't invest into a business because they want the actual future cash flows. They invest into it because they know they'll get a 10x exit in 3 or 4 years from it. Right? So they don't invest in the actual business. They invest into something that has the potential of an exit. So they don't chase the KPIs of generating revenue or getting to profitable quick enough. They drive valuation KPIs. Right? So businesses can lose money. Doesn't matter if they lose money. It's all about putting money in, driving up whatever is the KPIs in a valuation, and then exiting before the business close. So, for example, a lot of new startups get valued on a sales multiple. Now, a sales multiple is like, so now you have a R1 million revenue, and they say in the industry, which is literally just decided by the industry, some people just made it up, that a 10 times sales multiple is fair for a startup. Then they'll literally say that company is worth 10 million rand, even if they don't make any profits and they just lose money. Just because it's a startup and has the potential to be profitable in 10 years. And okay, fair enough. In the past that we've seen with Facebook and these big tech companies is, yes, they turn profitable quite quickly. So they do that. But I just got so upset because even some companies don't even drive revenue. They drive users because some valuations in America work. Like I think the valuations for ride sharing like Uber and Lyft and Bolt Taxify, like they work on the amount of rides they do in a month. So they actually do a valuation which is something like 3 times user times a million or something like that. There's some weird method that they value it. And now VCs invest and companies are driven only based to drive that specific valuation KPI, which I think actually killed business because now everyone's just building businesses to raise capital and to maybe exit in the future. I don't know how.
I think my take on that is that I also have like an interesting take on it. It's the whole thing of like, you know how fund managers or like investors will invest like their portfolio, a sizable portion of their portfolio, you know, obviously because they get like the whole performance fee and the transaction fee, right? If you're a fund manager, and they'll invest it into a new startup that is looking like it's booming. Let's say, for instance, like Uber was booming, like let's say that, right? And they're investing it so that, you know, their returns can look well. So they just say, come to your meeting. It's like, oh yeah, no, we're here. We want to see your business grow and stuff. But all they want you to do is just grow.
And just that, what they want you to grow, that specific KPI, that one thing. Just get as many rides in a month as you can.
And then and then it goes on to this whole thing of like, all they do is grow. All right, cool. And then they get their returns. You know, their books look good now. It's like now your size or your asset under management is growing because your returns are good. But that those returns is that actually fair? You know, because I mean, you look at the company 3 years from now. It's like it's grown, but like it's not fundamental growth. You know, you know. And now it goes back to this thing, and now it's the whole system's doing that over again. So then that person gets more money under their fund, and then all they do is go fund the new next startup. Like how can you grow? How can you grow? How can you grow? So it doesn't really promote like sustainable long term.
It doesn't,
you know,
they just drive a valuation.
Yeah, it's all for that portfolio. So it's that whole system.
And when you look at the portfolio, that whole window dressing aspect of it all is appalling actually, because we talked about like there's no real organic growth there because now they're pumping money for kind of the returns in the form of whatever KPIs that they had set initially. And yeah, I do think there's a culture in America. Well, I do think there's a culture that came with the digital age and whatever, that instant and that churning process. Because I was actually reading about these incubation hubs they have as well, where they literally get people in a room and getting them to develop ideas and develop apps and such things just for them to like be able to like sell off the idea, if that makes sense. And yeah, guys, I do think it takes out the beauty of
building a proper sustainable business. But the thing is, I like that whole incubation thing. I actually think we need more of it in South Africa, where we gave people, and we spoke about it in the previous podcast, where we give people the opportunity to build an idea for just a year. Just give them the runway to build ideas. The problem is, it's fine to have that initial, let's call it angel money, because it's even before the idea starts. You get money to start to build a business. I just don't like it that people put it in just thinking of an exit. And I understand the rationale behind it, because that is how financiers and capital allocators work. I mean, we're going into that industry. Yeah. That's how it's going to work. If I work in private equity, even in the studies that we do, we know that you put in your discounted cash flow, you put an exit value, a terminal value, you put in there for what you think you can sell it for in the future when you do your discounted cash flow for what you can pay for it now. So we go out with a strategy of exiting. And I know in private equity, one of the major things that you consider when you even buy a company is, how will I sell it off? Yeah. And obviously, one of the easiest way to sell companies off into the market or getting your money back as a financier is listing with an IPO. Yeah. And I think I spoke with a first rand trainee back when I was like second year or something. I can't remember his name, but he mentioned that the market is in a bubble at the moment for exactly this reason, because of the VCs and the private equity businesses. It's because these businesses drive a certain valuation and they value it in a certain way, and it's all based on something that it's like a circle jerk thing, where because the whole market says it's worth something, it's worth something. In the past, you invested in a company because it gave you cash flow, right? It gave you something back, actual cash flow that you can give. Now people invest into it because they want to sell it, not because of the recurring cash flow. Yeah. That's why you'll never see Warren Buffett invest into these things, because he knows until it doesn't give me sustainable dividends every year that I can see will be sustainable for the next 20 years. I'm not going to invest into this company, because I'm not investing to a company to sell it at a high multiple in the future. I'm investing into a company because I want the recurring cash flow from it. And that's how he says you get rich. So this market is in a bubble just because of the high exits from the early stage investors of the VCs and the private equity companies that just want that. Obviously, when they get the exit, they don't care what happens to the company after they exited. Yeah. When it's in the market, they don't care if pensions lose their money. They literally don't care. If they sold it at 10x, at a 10x multiple from their initial investment, they make a massive return. They go home, they have all their money in their pocket. It's based now. Companies are trading on the market at, I think Amazon's like 123 PE or something like that.
And it's like also now, if you look at that, it's like 123 PE. If you look at that, I mean,
bro, you literally, when you say it's worth, let me just check actually if it is that.
It's just like to put it in perspective, like now 120 years to get your initial investment back. If you look at it in terms of that, like in that perspective,
that's what a PE is.
Because that's what a PE is, and like now you look at it, it's like, oh, is that sustainable?
Well, the PE is 152 at the time of recording. This is Friday, 10 July. PE of 152. That's literally saying that I'll be fine to get my money back
in returns.
Returns in 152 years.
That's insane.
I'm sorry. I'm sorry. Nothing is that good. And I understand, yes, Amazon is a massive way to grow. Yes, because a high PE is normally substantiated by the good potential to grow. Because if the returns grow, obviously that PE gets smaller. Yeah. Because if their returns suddenly double next year, that PE will be halved.
But how much more, like how would the prospects be that much, like that high in sense of 150 years? they can't even catch up to like what they're
Bro,
estimating.
to have it at a fair P, they have to become like 10 times.
Yeah.
10 times. The returns have to increase 10 times to be at the 15p, which is almost fair. Like Warren Buffett won't invest into a company with a P over 10. That's what he says is when you buy, which is fair valuation.
It's
And I
all
mean,
value.
private equity companies don't buy at a higher P than 5. If you buy higher than a P of 5, it's massive.
Yeah, because obviously, like they look, it's like also.
But then they sell it off at a P of 20 into the market.
But that's what's happening now. Do you see how many companies are getting taken off the JSC? Like private equity firms just coming in, like sweeping these like, companies off. Like I think it's the Braid Group.
They're doing Braid.
Braid.
I think they own Virgin Active. Yes.
Yeah, but like I think Ethos Capital. I don't know what it was. Where Ethos had like a kind of a rights issue type of thing just before lockdown to like just buy them off, and after they bought them, guys, they have Virgin Active sitting in their books right now. Like Virgin Active is not doing anything. They've been under lockdown in South Africa and in the UK for like the longest, dude. So they're not really generating.
That's the thing.
returns,
Also,
dude.
we're going to see massive buyouts and takeovers now from private equity firms all over the world.
Yeah, because like it's like they just like I was reading podcasts, quite inherent in me, and it's like they were like holding cash. And then now it's like because there's so many companies trading at a discount, obviously we go by that term.
Well, not in America. America's now at flipping higher than before COVID started.
Are you serious?
Yeah, bro. That's what I don't know why I'm saying Warren Buffett so much in this podcast, but Warren Buffett, I think, is sitting on like $300 billion of cash. Yeah. He's ready to. He pulled out of all the airlines. He pulled out of so many things. He's just waiting because he knows this market's going to fall again. Yeah. Because what the market in America is basically saying now is that all the earnings will remain the same in the future as it was in the last 2 years, which is impossible because their unemployment is higher.
Yeah, it's like 30% now.
It's I don't know exactly what it is, but I went out crazily in the last couple of months because of COVID.
Yeah.
Now they're saying it's going to remain the same. It's impossible. So obviously, when the results start coming out in the next year, or even the quarter, because in America you need to put out quarterly reports. Even when the quarterly reports start coming out now, I think we're going to see massive drops in some industries. Like actually the property industry, in my opinion, is extremely discounted at the moment.
Yeah. Insanely. But that's why like I was actually
what's your view on that?
My view on that, like I was actually just reading some, because I'm really, really keen investing in property as soon as I start earning some income. This whole thing is, I don't know, it's one thing that I really wanna do, and I was thinking of different financing methods of how I'm going to like acquire this property. But someone was saying that, like, guys, if you're really keen on acquiring property, just be cautious as to acquiring it now. Because let's say, for example, you go to the bank, you ask for a mortgage loan right now for a property worth 800,000. The mortgage loan is still worth 800,000. You're still going to be paying repayments, regardless of whether it's prime linked or not. You're still going to be paying the principal off. So you're paying now less interest, but on an 800,000 rand mortgage. And even if you do want to sell it off later, the value is not going to be the same. So right now you're going to be selling off a property that's basically worth like half of what you bought it for, but there's still the loan to acquire it is going to be like, it's still 800,000. You still have to pay it off.
The thing is, if you buy a property now, if you pay now 800,000 for it and you take out a loan of 800,000 to pay it, chances are, because the property industry or the property values in South Africa are so low now, you shouldn't bank on that you'll be able to...
Did it plummet? That's the thing. Like, that was also our conversation with...
No, the thing is just it hasn't grown. It hasn't grown.
Yeah, because by...
And, okay, no, it did plummet, actually.
It plummeted,
remember
like,
in the REIT series that we did with Melt, the SAPI index, the South African Property Index, it fell with like 48% because of COVID.
Yeah.
Which makes sense because a lot of the property is retail.
Yeah.
And retail companies you can't make any return if the shops don't sell anything because your tenants are shops and they're not going to pay you. I mean, my dad knew a guy who he was head of one of the big property funds in South Africa, and he said as soon as lockdown was announced, Willis just called him up and said, we're not paying rent for 3 months. So that's just the problem with the retail.
Yeah.
But Mel said the retail let's say receipts from rental was like 20-something% during lockdown, but the commercial property, the warehousing, was still over 90%.
But I understand the rationale as to why the warehousing would like probably like boom. Remember the amount they say, right?
And
That
even in
podcast.
e-commerce now. Let's go into that. I love that because I honestly think if you can buy a warehouse now and make it available as a central depot in a certain town for e-commerce, even if it's just like a sizable community. Takealot, they have like big distribution centers in South Africa. Then they have smaller depots all over the country in smaller areas, right? But Takealot, and I think the e-commerce, only 25% of any shopping is through e-commerce now.
Yeah.
Only 25%. Right?
Sure.
It grew crazily because it was 6% like 4 years ago. Yeah. So it's obviously all of us know there's going to be a massive e-commerce boom in the future. So what if you can buy, actually in the property industry now, what if you can buy central depots, just small warehouses, just some place with a town with say now 2 million people living there. If Takealot, if someone doesn't have a depot there, you can go buy a depot there and rent it out.
I actually see such
you
a
can make
boom
proper return
in
on that.
also like logistics, like the logistical aspect of it all. Because somebody was saying that like they have products to sell, but guys, having to deliver to everyone is insane.
And there aren't enough delivery people.
There aren't.
Yeah, so free promo again. What we spoke about in our first episode, Checkers had their system where you can get your food within an hour. So I mean, that's a great stepping to go into. Yeah. It's that if you can provide that service now, if you buy a bunch of scooters, get a bunch of drivers, and kind of outsource that, to the major.
Yeah, if you build a massive logistics industry, a massive logistics network,
gig economy type
gig
stuff.
economy.
you get your warehouse. I got a warehouse. I list it up. And Takealot can take over. And you just get rental income, passive income. So it's embodying the whole thing of like you kind of have to build multiple income streams, and that's kind of what. I think for me, I've seen in the whole COVID situation is that you can't rely on just your primary source, because you need to always be planning for obviously the worst situation, So emergency funding, had a post about that on IGTV. I'm just here for promo.
Exactly, Randy. And I think like Robert Kiyosaki, the guy who wrote Rich Dad Poor Dad, always says if you have a job, you're one step away from being broke. Or if your job is your only income stream, you're one step away from being broke. So.
One decision away, dude.
Literally, if you work at a place and your only income stream is your job, right? You lose your job, you have no inflows, literally nothing. What are you going to do then? What if you have a mortgage to pay off? You have to pay off so many other things, which is fine if you have multiple incomes. Yeah. But I mean, you have to really plan around that. And I love the idea of how Robert Kiyosaki goes around it, where if you don't buy luxuries with your job money, because obviously all of us have to work to even start off building up capital to invest. Like in that emergency fund, around that emergency fund, you first have to obviously earn money to be able to put up an emergency fund. You have to build it up. But what he says is don't buy luxuries. Put that money that you would spend on a luxury, put that money monthly and buy like a flat. Yeah. Right? When the flat's paid off, the flat is going to give you cash outflows, like from the rental income that you'll get from it. And the cash can pay for anything. So don't go buy an expensive car. Rather put that amount that you'll spend on a car as a capital portion in a flat, maybe finance the rest of it, like 60% of it through debt, and pay off that debt. I mean, if you leverage your flat rentals 60% debt, 40% from your own capital, your rental will cover your mortgage payments, and
you'll even thing you're talking about.
And you'll even get some cash out of it. Yeah. So that's super easy, and then you can maybe use that and see how you can work around that to buy another car if you want to in the future.
Yeah, and then I mean that kind of is a springboard, so you'll have work, you have the property working for you, and then you can have investments,
And then you can also have a side thing if you want to do a gig economy thing on the side to build extra capital.
Streams of income, and it's like simple ways, I guess, breaking it down and kind of breaking the narrative of like just always relying on like the job that you have, and that's kind of something that we have to unlearn. It's this whole thing of like you go into the world, and you're like, oh yeah, okay, I need to be this person, and as soon as I have that, I'm okay. But then people don't really tell you that, okay, well, one stream of income is good, but it's not enough. It's not enough, So I think that's something we definitely all need to look
So
forward
use your active income to buy passive income assets, and then you'll live off your passive income.
I actually like now we're speaking about it. I'm actually so scared to see how the labor market's going to kind of change.
Bro, how labor regulation is going to change?
It's going to change insanely, because what companies are probably going to do, they're probably going to like downsize to the original operations, like the key operations that
They're going to lean up.
yeah, they're definitely going to like go back. So you remember, guys, I don't know, I don't want to go into too much like personal details, but just like the economies of scale thing. We used to like love talking about this, but I just feel like we're just going to see the opposite, where companies just like go back to the original basis of the operations, and people who
The thing is, the people who have the means to pay for certain things, the price is going to go up.
yeah,
So like you say, because economies of scale bring down prices,
yeah,
right? But now, because they're leaning up, they're only going to put out certain services, certain products,
Hundreds.
and it's going to be the high value things.
Yeah.
It's going to be the things that the people who have jobs and high paying jobs who can actually work remote, like the financial services industry, the people who can work from home, who can work remotely.
yeah,
The products they will consume are going to be on the market. The problem is, because the other day I heard that the government aren't paying out any SASSA grants in Mamelodi. They had a strike there. They're all taxi strike. They aren't paying any SASSA grants because they don't have any tax income. So what's going to happen there because of that? Because of the people not getting SASSA grants there, and also they don't have jobs. They don't pay taxi drivers, right, to get to jobs. The taxi drivers don't get any income. Their family don't get anything. Because of all those people who don't have money to spend on anything, the retailers don't get any inflows from sales because the people can't buy food. So ShopRite, all these USAF, all these lower LSM retailers get no income, right? Just because let's be fair, ShopRite and USAF, those companies, their success is highly dependent on SASSA grants.
hundreds.
They don't make any sales. I think maybe 20% of their sales go to like other things.
Can I please
like 20%
like,
is a bit
tell
rough,
you like a scary thing that I went through. I was just going through like some tax statistics, and I saw that 37% of like tax revenue is personal income tax, and that only 6 million people are employed in the country who pay taxes. So 6 million people are actually paying taxes off of the remuneration, and that's kind of a bit scary, guys, if you think about it. Like, if 6 million people make up 37% of the tax revenue, guys,
what if
what's
they
gonna
lose their
happen?
jobs? Because now only 1 million of them have to lose their jobs, and we lose a massive portion of all our tax income.
Hundreds.
I mean, if we
Like
look
our
at
tax income is going to be like our revenue collection is going to be absolutely horrific.
It's really in the pits.
That's why we're borrowing over R1 trillion.
Yeah.
It's that whole thing of I was reading this what's this report by Finchard, I think our co-founder Sia wrote on like the review on the budget. It spoke about debt and more debt. So it's this whole thing now. We're seeing that we weren't doing enough in terms of building a sustainable economy, and now I think for me, there's a narrative that goes around, is the whole thing of like people would pay taxes, but I mean, they've seen where their taxes go. I read about something early in the week where there was a guy who was supposed to provide during the lockdown. There's a company who's supposed to provide ambulances, like motorbike, like ambulances in the Eastern Cape, right? They paid him a tender of like 10 million to deliver 100 motorbikes, right? The cost of a motorbike was like 20,000. So it's like corruption, like in that
And
sense.
a motorbike, what does a big boy motorbike cost? Like 8,000 rand.
And now it's like I also think I know it's like people would pay taxes, but then they've seen the tax collection is great in the country. I mean, Soros is doing amazing.
And all our tax money goes to people who are actually unemployed but still earn salaries. So this is, I mean, I remember when you had that one FinChat discussion, I think like last year, when one of the gents said that his uncle works for the government, he earns a salary, but he literally hasn't gone to work for like 3 years.
Yeah.
So, in my opinion, that person is unemployed, but he earns a massive grant. That's all I see it, how I see it. So that's the thing, and that's our governmental structure. That's where our tax revenue goes. It's for people to sit at home and earn 30,000 rand a month, for doing nothing.
I genuinely feel like, and it was also said that the government, the public sector in general, is overly saturated, especially with jobs. They've employed more than they can actually service, and that's why we've been seeing wage cuts, and that's why we were going through this period of this period of time where we're kind of trying to deem what's necessary and what isn't necessary, what's a necessity, and it's just such a scary time for everyone, guys.
And I think what makes it hard is that because of the unions and the power of the unions in the country, it's like whenever you propose or you like announce that you're going to do job cuts, then there's a strike. You know what I mean? And then it's just like, I mean, if we saw the SAA situation, you know, where it's like, it's very, it's
yeah,
very,
I know. Our labor relations also is such a difficult point in South Africa because SAA got into trouble like 2 years ago, or even long before that. No, actually, they've been in trouble for very long. Since they changed up and then they brought in a CEO whose KPIs was set, again on the KPIs, whose KPIs was set incorrectly, and he just pulled a mush a load of cash out of the business, got rich, and left. So they had a lot of problem, and a lot of problems. And they actually suggested job cuts a big while ago of only like 700 jobs. I don't know how many people they employ. I think like 13,000 people. Yeah. Massive. They have a massive labor force. They only wanted to lay off 700 people to generate enough profit to get it on the legs. But because of unions, I'm not saying unions is wrong, but because of the union relationships and what happened there is they didn't do any job cuts. And because of that, it went deeper into a hole. Then they suggested 1,800. Then that was still not good. And then now they are where they are now, where they have to basically liquidate the whole company and everyone lose their jobs. Do you understand? Like if they retrench those 700 people, I'm very sad for those 700 people.
But it would have prolonged.
It would, for a year they wouldn't be employed. Yeah. Maybe they could get a job in a gig economy for hostess of an Airbnb. If they, in a year's time, they would probably be rehired when they're profitable again. Yeah, because the early stage is the earliest culprits can respond to staying profitable. Yeah. And because the salaries and wages line item is probably the biggest of most businesses in South Africa, that's the first place you go to cut your expenses to stay profitable, to be able to just sustain the business. But if you're not able to do that, it eats into your profits. What happens when you eat into your profits? Your share price drops drastically. If your share price drops, you can't access any equity financing. So you can't. If that's the problem with this share price isn't being listed. It's if your share price is low, you can't raise money through.
Yeah, you can't.
Issuing shares or doing a rights issue. Yeah. You can't do that because you're going to dilute shareholding like crazy.
It's not a viable source of financing.
You're going to eat into your net asset value. Because you're now suddenly raising funds at a lower value than other people bought it in the past. That's what we saw with Sasol when the oil price thing got up, because the oil price actually went lower to the cost that they actually take per barrel to generate. Well, I think it was like the oil price was far under $35 a barrel, and it costs them $32 or $35 a barrel to generate the oil. Where because of the drop in their share price, they couldn't do any rights issue or any equity financing just to get cash flow to cover the short runway that it would take for the oil price to come back up again. So they had to do all these. They had to get buyer for the Lake Charles project in America. But luckily the oil price started picking up and the Sasol recovered a bit, giving them space now to do maybe a rights issue or something like that. But that's the problem with these things and the political impact on the corporates. Like, it's very important to be regulated and to be sustainable, but I actually want to put a call out to the corporates to actually be more socially responsible so that the government doesn't have to regulate them. Because this struggle between them results in their demise.
Guys, when it's done well, it's done well. Have you guys been following the Edcon Group's business rescue and how the dissolution? It's beautiful, guys. The way they're handling everything is actually like pretty proper. How they're selling off like really profitable parts of their business, but they're trying to mix it of a combination of selling profitable parts, but also the ones that have the most employees employed there. So to preserve as many jobs.
Steinhoff also did that. Steinhoff also did that when the whole thing happened. They tried to sell off their to keep the most jobs. They tried, but I think they still lost like 130,000 jobs in the world.
Ew, that's a lot.
No, that was something. That was something. But who was the private equity company who bought Edcon? Was it Bain or McKinsey? It was the same thing. It was one of those big private equity companies who bought into get Edcon, which also was a leverage buyout, financed the whole thing majority through debt. Yeah. And
talking about funding, actually, I want to get your take on something here. So crowdfunding, I have a personal thing with that, but crowdfunding in terms of disrupting funding spaces. So the high barrier to entry in terms of like getting funding. So it's a thing you spoke about where if your share price is low, you can't go for a rights issue to obtain new funding, right? Yeah. So listening to the podcast again, very inherent
Which
to me.
podcast?
I'm not going to share my secrets. Anyway, so now we're talking about how crowdfunding is now disrupting like PE firms and like your loans and whatever in getting funding or going to the market and getting funding, because now literally you can get funding from random people.
You can basically make sales long time before you actually get to have the product.
Exactly. And now it's going into the whole thing of like, now will PE firms and other sorts of funding structures have to find a way to cut them out, or how do they get regulated, and how are we going to treat that? So what are you guys' takes on crowdfunding as a result of a more sustainable? Is it more sustainable?
I think because how crowdfunding works now. So at the moment there's the Kickstarter model, which is basically you put out an ad of a product that you are going to produce in the future, and then you give people early access to that at a discounted price. So if you're going to make some sort of pants, which is just so cool, you make a very nice ad about it. You put it on Kickstarter. There are other platforms like that, like Indiegogo and some, but it's mostly American platforms, where you can put a product out, people can buy it at a discount, and then in the future you send it to them. But that helps you finance your business, so you can make a sale before you even produce the product. Then on the other side, there's the model where you can actually finance equity of your business. And I've seen some businesses like that. I think there's a website in South Africa that does it, where people at the moment they do like property development with that they crowdfund, so people can make like contributions of 100,000 rand. I think the one project raised like where they put out a design of they want to develop this whole, let's say, lodge in a place in a very nice location somewhere next to a beach, and then they say it's going to cost 30 million rand. They put out the designs, and then people can actually invest into the equity of it. So like a big property fund will put in half, and then the other half will be financed through people who make contributions. That second one makes me very excited because firstly you give the general public access to make early stage investments into things that could have high value exits, something that we spoke about earlier, where that actually disrupts that specific thing that we spoke about, I think, because people, the general public, we can invest into something we invest into Capitec last year, right? You had to invest into it on a 20 PE, right? But if there was opportunity for you to invest into Capitec 20 long before, even before they listed, just to help them get off the ground, and you got 5% or even just 1% of what, because you gave them 10,000 rand or whatever, just to get off the ground, and you got 1% of the business through that, and you still hold that 1% till now, you could have become billionaire. But so I like that whole concept, and I really think I'd like to play around on that thing.
I'm actually also a big fan of these alternative investments opportunities, because
you just have to educate the people of what they're actually giving. Like you have to take the risk that you can lose all the money.
I actually think so, because I think a lot of I don't know, I think that especially like I've seen amongst young people my age, even the black community, is the stigma around not buying actual shares, but actually buying anything off the JC. People have this even if you tell them about easy equities, people aren't so much enticed.
They're skeptic, bro.
Yeah, they're really skeptic,
and they not lazy. They just don't have they don't want to go out and do all the research and
and that's why Bill Ackman always says, like, the best investment is the one where you know exactly what they're doing. If I give you 100 rand and I tell you what I'm going to do with the 100 rand, it's always the best investment because you know you're willing to take the risk because you actually understand. So, and that's why he says there's a huge stigma around stock exchanges as well, because we see money going up, money going down. It's very difficult to not necessarily understand, but to communicate. How you can generate.
So that's actually a key thing then, considering crowdfunding equity, especially for startups. You have to communicate thoroughly so that people know what they can invest
100%. And no one needs to be an expert. No one should need to be an expert to participate in crowdfunding at all.
Yeah. No, I agree 100% with that.
I think I was looking at this thing of there were new like property listings in like Santon about it's fractional investing. You know,
I think Easy Equities brought out Easy Properties. I think they launched it this week.
Yeah, and
they did. Yeah.
I think it was actually on Easy Equities, free promo. Sorry, not Easy Equities, but like the property version. And like I think it was my sister and her friends were pitching it on like they have a little investing group. It's really cool where they discuss like a lot of like investing things. There's this talking about this whole thing of like building that acumen, doing research, and like it was a pitch, and then like the first person like was like, okay, cool, what exactly is this, and then it's this whole thing of just asking yourself, okay, what am I investing in, and can you see that value, and like how do they generate revenue, because this important thing I was doing a deep dive into telecoms, that industry, and I was doing a deep dive into like how, like, let's say Vodacom makes money and like the different ways that they make money. So I looked through the financials, looked through the revenue, and kind of just like inspect, and just like go through it and to see, okay, if I can see how they make money, I can see how they're impacted by COVID, and how in the short term that adds up, and then if my long-term view, what's my long-term view and how that's driven, and then I can see, okay, cool, if I can start learning how to do that, I can do that on a more reasonable basis, so that's just my take on like always just try and build and upskill yourself, and there's so many like different ways to do that. I mean, FinChat's one of them, and like, yeah.
And I think 100%, just to close off, I honestly agree 100% with Randy, where I think the first thing when you start analyzing a business is just understanding how they make money and what they spend their money on.
Yeah.
Because then it makes it so easy to analyze a company going forward, what the market impact has on them, and so on. I think that's because I love thinking macro. I love thinking of how the macroeconomy influences a certain industry, because it's easy to understand that. Where obviously you have to dive deeper into every company, because some companies do something better and more efficient and more clever than others in an industry. But just to start at that top level. So yeah.
And thank you guys so much for tuning in. I didn't do my intro, so I'll do my intro now. My name is Randy Seda, one of the co-founders of FinChat, and thank you so much for listening in to our new type of way we have conversations. They're a bit longer than the usual podcast, but just want to remind you that you can find us on all our social media platforms at FinChatCo. And if you have a topic that you want us to discuss, or if you want to get your voice in on the podcast as a sound, as a launching pad for our conversations, send us a DM, send us an email, subscribe to our newsletter, and let us know what you think. Give us feedback. Remember to give us favorable rating on all your podcast platforms. My name is Randy Seda. We are FinChat, and thank you very much. Goodbye.